Man, imagine buying Bitcoin in like 2010 or something. You would be a multi-millionaire by now. What to do? Now it's too expensive. It's 69K, almost $70,000. What? It crashed? Really? How much is it now? 20,000? Man, that thing is going to zero. I'm not touching that. Hello everyone, welcome to my new video. My name is Dan, and in this video we will be talking about what are the indicators in trading and how to use them properly. Let's get right into it. What I've been using personally for trading as a beginner were, well, first I was using many indicators, right? And it was so confusing to me. I couldn't see anything, and I didn't want to admit to myself that this is all confusing, just because I saw a lot of internet gurus are using all these indicators, and I was like, okay, I don't want to be dumb, I want to be smart and I want to look intelligent while trading. So I'll just put all these indicators out, what they recommended to me, and I will be using them and I'll start making some money. And no, that's not how it worked. Basically, I was just confused. I didn't know where to look. I didn't know which signals to follow. I didn't know what was the correct signal, what was wrong signal. So I was just following everything and nothing. Basically, I was taking every single trade with every single indicator signal, and soon I came to a realization that you cannot trade like this. You need a proper system, and you need a proper algorithm and a proper set of rules which you will follow in order to trade together with the indicators. What do I mean by that? Well, if you have a proven system that works and set of rules that you're following, like let's say key market levels combined together with the indicators, right? Then you have your own algorithm, your own systems in place, and you know when you will pull the trigger for a trade. You'll exactly know when to enter the trade, when to exit the trade, and you will not have any confusion or should I just enter the trade now? Should I not? Should I follow the signal from this indicator? When you have all your systems in place, you will be confident and you will know when is the right time to go into a trade and when is the right time to exit the trade. So let's cover the most basic indicators that are used for beginners in trading. And we will start with MACD. MACD is a momentum indicator, which is short for moving average convergence divergence. MACD was created in 1979 and it is widely used even to this day. However, obviously when you think about it logically, it's created in 1979 and the market conditions back then were very, very much different than they are now. So now we have much more retail traders involved. The entry barrier into trading is much lower than it used to be. It is much more simpler with the power of internet. It is much more easier to get into trading nowadays than it was back in the 80s. So you don't have to deal with going to the bank, signing to the papers. You do everything to internet, super easy, super convenient from your home. And it has never been easier or better time to invest than it is in 2022. Hence this channel and the reason why I'm doing these videos. All right, so let's get back to what is MACD. We'll move to the PC right now and I will be explaining you what exactly is MACD. All right, so this is how MACD looks like. So first of all, I will explain to you what are the components of MACD. This right here is so-called zero line, like a neutral line, okay? These red and green bars are so-called histogram, okay? Blue line is the signal line, and the orange line is a MACD line. Basically, this indicator, these two lines, those are just the moving averages, okay? A certain period of time, moving averages, that are crossing one another and giving you signals in order to buy or sell. So the original way of using MACD is when the signal line, which is the blue line, crosses the orange line to the upside, it is a signal to buy, okay? When the blue line or the signal line crosses the orange line or the MACD line to the downside, like here, it is a signal to sell, okay? But since the MACD, as I've said, was created in the 80s, okay, 1979, and the market conditions were very much different back then, a lot of people don't use it the traditional way. I am one of them. I don't use it with the buy and sell signals, but if you test it and if it works for you, and if you are actually making money with the using signals only by using MACD as it's intended, go ahead, use it, no problem at all, right? Whatever makes you money and whatever works in the long run, just go ahead and use it. But I will explain to you how I personally use it and what I found it to be the most profitable way of trading with indicators for me. So I do not go with the buy and sell signals. I don't follow buy and sell signals. I'll just minimize it right now. Give me a second. So we have a NASDAQ chart, 1-day chart, okay? I will show you how I interpret the MACD and how I use it to my advantage. In the traditional way, as I've said, we would sell here, buy over here, buy over here, sell over here, buy over here, etc., etc. So you have many signals, all right? But since it's a lagging indicators, those signals sometimes can be late, can be false, or you can have a time without signals at all. So it can be very confusing, and when it gives you a false signal after a long time of waiting, you just get frustrated. But let's get back into it. Personally, I use MACD only to identify weaknesses in the trend or to confirm the current strength of the trend that I'm trading. I use convergence and divergence. If you don't know these two terms, we will be covering them in next videos. However, just briefly, for now, I will not be going deep into explanation of what divergence and convergence are. Divergence is when something is not matching, when something is mismatching, when it's different. Like for example, I will give you an explanation on the chart. You see this wave over here, okay? This wave over here. And you see this beginning of creation of the wave right here, okay? This peak right here and this peak right here. This wave is higher than this peak right here, yeah? Is it? Yes, it is. Because it reached to a price point of around 12,900. Here is around 12,500. So what does the MACD tell us? You see the peak over here. So it's the same peak. The MACD is representing the same peak, the same wave, all right? It tells us that this peak over here is currently higher, okay, than the previous one, which is actually not the case. You see the chart. This is divergence, and I'm gonna mark it so you can see it. So I'll take this lines over here. Boom. Okay, so you see how this actually wave is showing that it's higher than the previous one, when in reality it is lower. So they are diverging, all right? And this is a weakness in the current trend. There are two types of divergence: bullish divergence and there is bearish divergence. And on top of that, there are two subcategories of divergence, of bullish and bearish divergence, which are hidden divergences: hidden bullish divergence and hidden bearish divergence. As I said, it is a lot to process. It is a lesson on its own, so I will be covering it separately. But I just want you to start slowly learning about the terms and Google them on your own as well, on your own time. If you have the time, just Google divergence in trading, bullish divergence, bearish divergence, bullish hidden divergence, and hidden bearish divergence. And hopefully you will decipher it or try to understand what does it mean. Okay, so in this case over here, we have a hidden bearish divergence. The indicator is showing higher highs in a downtrend, okay? Because when you look at the bigger picture, this is a downtrend, all right? Let's identify the trend, okay? So it is a downtrend. In a downtrend, I'll just delete this line. The indicator, which is MACD, is giving us a higher highs, when in reality we are creating lower highs for now. So if you see a sign of weakness in the next period of time, you want to trade it in the trend direction, which is short, okay? But for now, the trend looks, short-term trend looks very strong, all right? But once you see a sign of weakness, and once the cracks start showing in this trend, you want to trade short. Okay, this is as per following divergence patterns, okay, and divergence rules. But of course, you don't have to, and this is not 100%, definitely not 100% accurate. There are so many times when you have convergence or divergence, which is actually in reality turn out to be totally different. Like you get a divergence. Let's say we are now showing hidden bearish divergence on the indicator, and let's say we actually smash these highs, and we end up coming here. Okay, we end up in this area, and the indicator follows it. In that case, this will not be a divergence anymore. This will become convergence. So just let me draw it real quick. Sorry. So if we do something like this, okay, so now the indicator will follow it, all right, and this will be convergence. Convergence is a confirmation of something, so something that it's matching, a confirmation of the trend. If this trend continues going up, creates a new higher high, and the indicator continues to follow it, then we have the convergence. But at the moment, we have currently a hidden bearish divergence, and maybe upon showing of some weaknesses, I will trade it short. This is just one of the ways that you can trade with MACD by using divergence, convergence. Basically, you're looking for cracks in the trend. You want to see weaknesses forming, okay? And follow those weaknesses or strength to confirm your bias or to confirm the current trend. This is just one of the tools that you can combine together with the key market indicators, key market levels or other indicators in order to make your trading more successful and to have a little bit of edge over other traders and to have a little bit more success in the market in the long run. But in order to use these indicators and be profitable in the long run, as I've already mentioned, you need to have a proper system, a proper algorithm that you need to follow. And only then, if you have the systems in place and you follow the systems without any question, without any emotional attachments, only then you will be successful in the long run. So to recap, MACD can be used in a traditional way to follow the signal line. Whenever the signal line tells you to sell, you sell. Whenever the signal line tells you to buy, you buy. Or you can follow it in the way that I'm following it, which is looking for weaknesses in the trend, looking for current divergences in the trend, spotting them and judging yourself based on other stuff, based on the market sentiment, based on the key market levels. Will you be taking trade in the counter trend, or you will be waiting for a better signal, better opportunity to take a trade, let's say into trend or something else? Okay, let's move on to the next very popular indicator that is widely used in trading, and that is RSI, or Relative Strength Index. Let's move on to the PC to show you how it looks like. Okay, so this is a TradingView version of RSI, and the RSI is represented as a oscillator, okay, on the graph, and it gives you momentum strength, and it shows you oversold or overbought areas of the price. Let's minimize it now and show you how does it look like, okay, on the Nasdaq graph. Basically, whenever RSI crosses over area of 70, it is considered as overbought area, and that is usually a signal to sell or to short certain instrument, stock or whatever. When it goes below the 30 area over here, it like it did over here, it is a signal to buy. That means that the instrument that you're trading is oversold and you should buy. However, again, this is a very much traditional way of looking at RSI, and I again am not using it like that. I do look at oversold and overbought areas. However, I'm not strictly going by them. What I like to see in RSI is a confirmation of multiple things. which is combine it together with the MACD, look for the areas, if it's above the neutral zone, which again is 50. 50, by the way, is always a neutral zone in indicators. So if it's above 50, that means that the momentum is strong. And again, I'm looking for divergences or convergences. So I'm looking for, let's just mark it right here. Same thing as in previous case, as with MACD, it shows absolutely the same thing. Hidden bearish divergence on the daily chart. So we are having a weakness at this point in this trend, and this trend tells us, I might reverse back, and let me just take the brush. I might reverse back and go all the way down and continue into the downtrend, because as I've said, we are in a downtrend at the moment. However, again, nothing 100%, nothing confirmed, just an idea, just something that mathematical indicator gave us, and mathematical calculation told us, listen, based on the previous prices, this should happen. So I like to see RSI above 50 if the trend is really strong, and I like to see RSI below 50 if the downtrend is very strong. When we reach areas of oversold and overbought, you have many momentum traders who try to scalp. So in that areas you can usually see like some signs of reversal, but those reversals can last for an extended period of time, so you don't trust them like that much. But in general, as I've said, to combine it together with MACD, I like to see some signs of divergence or convergence. Then the momentum strength that is above 50, that indicates that actually the trend is strong, right? So even if the trend crosses 70, that doesn't guarantee that I'm going to be selling, because that tells me that actual current trend is very strong, right? There's a lot of buyers, there's a lot of buying power, and that can last for days, months, weeks, whatever. So don't always sell when it's an overbought zone, and don't always buy when it's an oversold zone. You need to have multiple confirmations from different tools like key market levels, like other indicators, moving averages, etc. So with this being said, I will be wrapping up this video over here. I hope you found it helpful, and I hope you saw what I'm looking into the trading indicators, what I want to see from them, how I use them in my trading, and how you can implement them into your beginner's trading. So basically, me personally, I like to look in those momentum indicators. Since I'm a day trader, I like to look for momentum plays. I like to see strength in the trend, or I like to see weakness in the trend, so I can make my decisions based on the levels and buy and sell according to that. There are many other tools that I'm using in my personal trading and in my personal trading algorithm that gives me an edge and gives me success to be profitable in the long run. And you will slowly adapt, you will slowly find your own edge and your own personal tools that you will be using and that will help you in your trading journey. So if it's an indicator that works in a classic way, if it's a indicator that works in a little bit adjusted or different way, that's all fine. That is all good. You will find something that suits you, and then you will be implementing it, testing it, and eventually using it. That's it for today's video. I hope you enjoyed it, and stay tuned for the next one. Hope you have a great day.